Right, okay, so should all be cushy. Just make sure this is all. There we go. 1 second. How we going on, guys? There's a few people in here. It's annoying. I can't even like share it on LinkedIn because I've been locked out of my account, so I'm in the process of just waiting to get that sorted. But yeah, what I've just done is I've just filmed a full top-down analysis on XAU USD. So I'm gonna a case study video essentially. So what I'm going to do is get that edited, essentially. Let later tonight, and then get that uploaded probably for Monday. So that should be out on Monday, which should be good. But if you guys have any markets for people that are in now, if you have any markets that you want me to go over, if there's anything you're unsure about within Forex, let me know. I'm going to be on here for, it's probably going to be a short-ish stream. I just want to be able to answer some questions. I've been a bit, not really been in too much in the chat as of recently. I've just been busy with the apartment here in Manchester and things like that, and just getting things sorted, some personal things. So I jump on here, give you guys the opportunity to speak to me now about anything you're unsure about, any markets you want analyzing, any kind of strategies that you want me to go over, risk management, things of that nature. Now is the time to ask away, essentially. In terms of positions we've placed this week, I think we've placed 3 positions, 2 of which actually lost, and then I think we won. We had a very good trade on Euro NZD, which generated us with about 7 RR. So we lost 2 RR from the 2 losing positions, so 2 RR down from them, and then obviously we won 7 RR. So we're still up 5 RR. If you're risking 1%, it's 5% up. Risking 2%, that's 10% up for the week. So it's not been a bad week. Same with last week, we had 2 winning positions, 2 losing positions. So again, 2 RR down from the losers, but then I think we made I think it was 14 RR from the 2 winning ones. So we ended the week up 12 RR up, which was amazing. So 12% last week, about 5% this week. So it's really, really not a bad week. I mean, for me personally, obviously, I'd like to be more active and providing more opportunities to the clients over in the VIP chat. But just with me being busy with this whole move, we're actually looking to move to a new place in Manchester. So we've kind of been up in the air with things and getting all that sorted. So that's hence why I've not been around so much in the VIP chat, but still try and provide opportunities for you all. Do you know what I'm saying? But yeah, if there's any specific markets you want me to go over, leave them in the comments. I'll check. I need to open another tab on here. Bear with me just 2 seconds, so I can check on Trading View as well. If there's any specific markets you want me to go over or any trading techniques, let me know. Move this over here. Okay, 1 second. That's a load of stuff for another project as well that I've got. I'm in the process of doing, so that'll be interesting. But let me just move this over here. So I've got that one there. So I can see both comment sections, perfect. And then that, and then this here. Hello, do you see any opportunities on Great British Pound to the US dollar? Let's have a little look. Literally just sorting this out 1 second, mate. I had someone comment on the last Sunday sessions video about gold, hence why I've done a gold top down. So if there's ever any pairs that you want me to go over, analyze, leave them in the comments of videos as well, because that's a brilliant way of just gives me the opportunity then to make videos based on what you guys are saying. Do you know what I mean? Right, won't be 2 seconds. I'll have a look at GU now for you, bud. I just want to see. Why is it not letting me? It's making it so I can't see the comments now. Right, okay, we'll have to do it this way. That's fine. Okay, so let's have a little look. GU, Great British Pound to US dollar. Let's do a full top down analysis, because I think to be honest with you, my whole markets need updating. With me not being like around as much as recent, so let's just do a complete full top down analysis. Yeah, that was a short opportunity actually that was given in a Sunday sessions video not so long ago. So anyone who's in short on GU, well done. But let's just do a complete. I want to do a complete top down for everyone now on GU. In fact, I think that might have been. Yeah, I think it was. It was either a Sunday sessions or maybe like a case study. I'm pretty sure. But let's just do a full top down. Right, daily. So it's got analysis on it from clients. 1 second. Up. Right, let me just delete everything. I'll just have old analysis on from when I've had one-to-one sessions with clients. Let me just get rid of everything here. Okay, cool. So when we obviously perform our top-down analysis, the best thing we can do is look at the higher time frame structure. This just allows us to get a better scope of what's going on in the market. So I like to zoom in just so I can see everything, and I can really decipher the overall bias of the market. Yeah. So clearly here, price is trading goes in a bearish way. That's if we go from here to here, and then we can see that prices trading goes down now at the moment. So we've broken a low. We've broken what was a protected low in this sense that created a high. We've then seen price actually trade down to create a new lower low. So realistically, I do want to be trading this market in a bearish way. This is just looking at this in a quick way. Now, as we zoom in and we look at the most recent impulsive wave that's traded us lower, it's important to try and find any areas of supply that price could trade up and into to give us trading opportunities to go short from. So, I mean, straight from the offset, there's obviously this up here as an area of interest. We have a lot of inefficient structure below. So price could come to trade up and into this before trading goes lower. Now, once we zoom in and we look at this structure, an exercise that's dead good as well, that like I've just started to kind of show my one-to-one clients, is when we come to analyze the markets, okay, and we want to try and highlight areas of supply or demand, depending on the direction, sometimes it can get a bit it can be difficult because there is a lot to look at, right? So to eliminate a lot of work, what you can do is you can mark out the highs. In a bearish market, you would mark out the highs. In a bullish market, you would highlight out the lows, right? Now, by doing this, what you are doing is you're actually eliminating a lot of areas within the market that realistically you don't need to be checking because it's already been mitigated. These highs have come to mitigate everything below it and everything it trades into. So just looking at this, right, we can now forget about all of this data here, all of this data. We can forget about all of this data, all of this data. We need to obviously look into that, but we can forget about all of this and all of this. We can forget about all of this and all of this data as well. And then up to here basically. So all of that data that I've scribbled on, we can forget about. We don't need to worry about because it's been mitigated by the highs that have been set in the market. We could even say this as well. So anything from here to here has been mitigated up to this point. So now it just leaves us with a few areas to focus on, right? So we go from here to here as an area to focus on, from here to here as an area to focus on, and now if we go and do it with this most recent high, we could go from there to there as an area to focus on, and then we could then say we zoom in on this. That's come to mitigate this. There is potentially this here as well. So I would argue that we would say from there to there, potentially. Let's go from there to there. Somewhere to also look at, right? So now we have our areas to look at. So we can get rid of all the noise. We can get rid of all this stuff. Clean the market, clean the charts back up. But what it does is it gives us areas to focus on, right? So now we just get rid of all this stuff. No, we're done. There we go. Now we can just zoom in. And we can say, right, well, has everything here been mitigated in the markets? So when we see things like this, where the wick has come down and then what follows is a wick that comes up, actually inside of that is bullish candles because price has come down to set that low, but then price has actually closed up here, right? So the fact that price has had to close up here means that bullish structure or bullish candles will have had to be produced to actually create that close there, right? Then what's happened is price has then obviously come down here and then created that. So if we just mark this out like that, when we go down on the time frames, it will actually show itself. So we would argue that this has actually come to mitigate these green candles. This has come to mitigate this, and then it has been mitigated in that respect. What hasn't, or what looks to have not been mitigated, was this, but price has just penetrated that. So that could be an area of interest. And as we go down on timeframes and we start to analyze the markets, we'll see that price actually has mitigated that for a reason. We've been delivered rates of structure to the downside, and we could look to go bearish in this market. But just as a rule of thumb, when we do our top-down analysis, we can then look inside of this. So when we go down to the daily timeframes, you can see how those green candles that I was speaking about now present themselves to us. So now what we can do is we can then readjust and we can say, right, okay, well, this has come to mitigate this green candle. But what do we see again? Well, within this, we have those wicks, which are hidden order blocks. So now I'm actually going to mark this out as an area of interest, and I'm going to see if that has been mitigated. Everything else has been mitigated, and we have seen, well, there's actually this as well up here that could be seen as a point of interest. Let's just move that up, and we will notice that these turn into green candles as we go down on the time frames. They're hidden order blocks. So I'm going to get rid of all of that now because everything else has been mitigated. So now when we go down on time frames, let's go to the 4 hour. You'll see how that green candle presents itself, and we are delivered with an efficient structure. But what we have seen actually is prices wicked in here. So as we go down on time frames, we get more and more information. We can see here the green candles again present themselves to us and actually show that there is an order block there somewhere that has been left unmitigated. So that's a point of interest for me, as well as this one over here, right? So there's 2 higher time frame order blocks that we've marked out. Now, if we just check the other zones, let's go back to the daily so I can get up here. All right. So again, we do the same thing, right? So we look with inside these zones and we say, okay, well, has everything been cleared? Is there anywhere that could be seen as unmitigated? This comes to wick into this. This comes to clear the inefficient structure below, but actually leaves this area. So I would say that could be a potential area to look at. And then we can further refine this as we go down. That comes to clear this, that comes to clear that, so that's fine. I would say that everywhere else has been left unmitigated within that, so we can get rid of this. This has been left unmitigated. That has been wicked into this one, and then I would say potentially here as well, but that's been mitigated. That mitigates the other one, so we've got this as an area also. Okay, cool. So now we have zones to work with, right? And there was a zone that I was going to go down on. Where was it? We could go from here, let's say. So just replay time. we can see how these areas are more, they present themselves more clearly and they're more prominent when we go down on the time frames, and this just gives us key areas to look for when we do our analysis. Okay, so now that we have zones to work with, I'm just going to cancel this playback. We have higher time frame supply zones that price could in fact come to trade up and into, before providing us with more bearishness to the downside. We obviously have this higher time frame zone as well. However, let's just have a look. Let's just go back and reassess. So we've seen that prices continues to set lows and continues to set lower highs, which is absolutely fine. We have no suggestion realistically that price is in prep to traders in a bullish way. What we have seen, however, is a break of structure to the upside here as a higher time frame break of structure. So I would argue that this is probably the daily high, and we've seen price break that. So that's a BOS to the upside. Hence why prices continue to trade us in a bullish way. What we are seeing now is price pulling back to potentially set its first higher low, should I say. So if we mark this out, this is a clear order block. So price could come as low as this point to set its higher low before setting a new higher high. So we could actually be in the works of some bullish structure to the upside. I'm just going to get my path tool out. Got my headphones just on the screen, so it's hard to see. But we may see something like this, see? Price continues trading us up. So these may provide us with some temporary bearishness. But I do truly believe that price is probably looking to put in a higher time frame bullish correction to the upside. And we'll go into this in just a moment. But we have zones in areas that are going to deliver us with some kind of bearish structure. Yeah. But I ultimately feel price will come up to clear this, or has to eventually, and then will continue to trade us down in a bearish way, because this market is bearish, right? So the reason why we're looking to go long at the moment is just because we've had a break of structure to the upside and we've had a break in a daily protected high. This high has been broken. We've had a continuation in bullish structure. Price is simply pulling back now just to put in that bullish corrective wave before trading us higher to set that new bullish impulse. Now, as we go down on the time frames, just going as low as the daily now, we can start to refine this zone. So we can refine it as low as this. And we can continue to do this as we go down and down on the time frames. Now, to have confirmation that price is putting in this bearish correction, we can see here that, again, looking at this bullish impulsive wave, we've now had a break of structure to the downside. So this suggests that price is putting in that corrective wave within this bullish correction. There's a correction within a correction. This is the higher time frame corrective wave. This is now a fractal corrective wave to set the next higher low, right? So as we go down on timeframes again, what we can start to do is we can start to look for areas of supply within this impulsive wave that broke the structure to the downside. Now, the reason why we're doing this is so we can look for areas to enter in on short positions. So we work our way up from the bottom and we try and find any areas that have been left unmitigated. Well, I can see straight away here, this would be a point of interest for me. This is a clear order block. We have an efficient structure. This is a valid order block that would represent a supply zone. We could then argue that there's also this. And again, we can get confirmation of this as we go down on time frames. I would say that's been wicked into, that's been wicked into, that's been mitigated. That mitigates that. That comes to clear this. And then there's this actually as well up here. Now, a common question is, what zones are stronger? It's hard to say. I mean, there's indicators where you can look for like the volume HD. You can use that to try and see how much volume is being introduced in certain areas within the market. But ultimately, it's all about your supply and demand balance. I just look at it as a scale. When price trades into a supply zone, more supply is being introduced. But if there's still a larger amount of demand, yes, supply is being introduced, which may give us some temporary bearishness, but the demand is still stronger, and therefore price is going to continue trading higher. Only when that supply and demand balance flips, and now there's more supply than there is demand, will we see a reversal in the market and a new trend forming. So it's all about that balance, essentially. So as we go down the time frames, we've obviously looked for supply zones. I've got areas of supply here to go bearish from. Exactly that, to go bearish from. So now we have an area to go bearish from to trade us down into the demand zone marked below, where we will then be going long from. So my bias ultimately is to go short before I go long, right? So to answer your question, it's been a very long explanation, but I just wanted to perform a quick top-down analysis. I am looking to go longer term, to trade us into that higher time frame supply zone, to go short then furthermore. But we can look to go short from one of three supply zones here. Now, as we go down on the time frames, what we now need to see is a break of structure to the upside. Why do we need to see a break of structure to the upside? Because that confirms that price is now putting in a correction within a correction within a correction. Price is now correcting to trade us into this, so it can continue the higher time frame correction. So we want to see this high break. Why do we want to see this high break? Because this is the last protected high. Why is this the last protected high? Because this high here created the lowest low. This impulse created this low here, and this is the lowest low within this current bearish structure, right? So this is the last protected high. So as soon as we have a break in that then confirms to us, right, the market is now ready to put in a bullish correction within this time frames, looking at the 1 hours, and price should trade us into one of three supply zones. Again, what we can do is we can go down on time frames, try and find any other areas that have been left unmitigated, and obviously refine our zones. So let's go to this one up here. So that's obviously standing out. So we found another area of supply, which is great. And then we can then refine that to that. Perfect. Would that? Yeah, that would also be one. So there's plenty of areas of supply here for price to trade up and into. Now, people may think, oh, it's so daunting having multiple areas of supply or multiple areas of demand. There's nothing daunting about it, because it's not as though we set pending orders. I mean, you can set pending orders from these zones and areas, so you get involved in every opportunity. But by setting pending orders, not only are you going to get involved in every winning position, but you're also going to get involved in every losing position. So in order to alleviate those losing positions, I would sit and wait patiently for breaks of structure in and around these areas of supply and demand, these points of interest. So now that we have these areas, it's a case of waiting for price to trade up and into them before we go short in this market. So now what I'm going to do is draw a path just so I can show my explanation a bit more clearly. So we'd have a break of structure to the upside, price then pulls back to set its first higher low, price then trades up. We may see price reject to the downside, give us some bearishness from here. We then see price continue trading higher, price then trades down, price trades higher. Now the impulses may not be this long, and the corrective waves may not be this deep or shallow, but I'm just showing you as an example. Price then trades up into an area of supply. The supply and demand balance flips, trades us down and into, let's say, this area of demand here, which then takes us all the way up and into this area of supply, which then flips the supply and demand balance again, trading us lower in this market. And you can see that, or trading us lower to set a new low, right? So you can see within this market, just by doing this, we are able to, if I just get rid of that there, we are able to create a story and create a direction in this market. So we can see that the bullishness is trading us up. It's mitigating all of those areas of supply fractally, but it's still, the demand is outweighing the supply. Only until it gets to this point here is enough supply introduced to actually flip the bias. That then encourages price to trade down. We've hit a large area of demand. Price then picks up all that demand. Price accumulates, brings price all the way up, trades price into a larger area of supply. That then flips the market again. And then what will follow is maybe a continuation in bullishness all the way up and into the higher time frame supply zone. Obviously we would see price put in bullish structure like this, but you get my drift. And then that's when we would then see that reversal to the downside. So then when you look at this and we zoom out, it all comes together. So we just move this to the right, to the left, should I say. You can see how this all comes together. We have temporary long positions to go short, to then go long, to then go short on the higher time frames. But then when we go to the weekly, we are following that bearish structure, okay? Because we have a low set. So we get my brush. We have a low set. We have a high set. We have a low set, a high set, and what follows? A lower low. So now when we draw a path to follow this, what are we left with? We'll just get rid of this for the time being. What are we left with? Clear bearish structure to the downside. That's following the bias that we had for this market. And that's how I perform my top-down analysis. And I make sure that everything correlates with one another and there's nothing that's missed, yeah? And it's important that we do this, and it's important that we ensure that our analysis correlates on all time frames and we are able to see exactly what's going on the higher time frames right the way down to the 5 and 15 minutes. This is how you're able to get involved in higher time frame swings with more refined entries. But yeah, that's just a quick top down. Well, it wasn't quick, but that's just a little top down analysis on the GU. So yeah, I mean, to answer your question, you could look for long positions. Ultimately, this market is bearish though, but you can look for some long positions because price is going to be putting in a higher time frame correction. I'm just going to see if there's any. Let's see if we can get involved in some scalps or something. Let's have a look. So a gap, see. Price is just trading into this. I think we may actually see price continue to trade lower, trade into clear this gap and actually trade into this order block, and then that's when we'll see that next pump up. We just see price provide a double top and clear this order block, and I think we may see market. And I'm going to show you now. The reason why is because I want actually to see price trade down and into this. I don't know why my screen is lagging so much as well. Drive me crazy. You can see here price has wicked into this. This has all been done from the NFP today at 1:30. Yeah, so everything's been mitigated from that. So now, I mean, we could actually look to go short in this market, but I want to see price. I want to try and get a good entry. So in order to get a good entry, we could say that this has been left unmitigated right here. That has now been cleared by this. So our next point would be here. So if you want it to be safe when it comes to placing a position in the market, I mean, you could set your take profit just above that. Not a long position, a short. And then we would get involved from here. We would have our stop loss just above this, like that. 2 pips above, so it's 6.3, so it's going to be 8.3. Take profit just above here if you wanted to, or I would stretch it probably as low as this point, but you could stretch it as then that would be a 1 to 3, or if you wanted to go as low as, I would probably go as low as this last low, so just above it. We can see it's a 1 to 10. So this is actually a position I might put in the chat now for the guys. I just want to wait for price to trade in before entering. So I'm just going to get the trade ready. Great British Pound. Thank you very much, Mum. If there's any other markets you want me to go over, let me know. I'm just getting ready for this. I'm just getting it prepped. 1.2206. 8 pips. Take profit. Do you know why we set our take profit just above the last low? I want to see if you can answer it. If you know why, there's a valid reason as to why we do it. Sinking into my chair. See how price reacts now. Rust Devil. I'll have a little look at this now. Just want to see if we can get some entry confirmation for a short on this. We want to see some rejection from this zone. See if there's anything else. So that's been reacted to as well here. Go back to the 5. We've had that. We would say that was a breaker structure to the downside. Has price broken that? If price has broken that, then maybe. It's an equal high. You can see how price was putting in bullish structure, and then because we've been stung with the NFP, price has obviously traded lower because of that, which has made the Great British Pound lessen in value, obviously. This is an area of supply as well. Okay. Let's see if we are given entry confirmation anyway. There may be enough demand in this market anyways to see price trade up. Let's have a look. Let's just wait anyway. I just want to see. No, I just want to double check. So it's come to break that low, but has it traded into anything as such? No. Potentially, actually. I want to see this gap get cleared. Let's have a look anyway. If we have confirmation to enter, I'm definitely looking to go short. If not, I won't be. Price may come to trade into that doji and then provide us with more bearishness. Has it traded in yet? I'll have a look at USD JPY in just a moment, bro. Price has just wicked in. Let's have a look. We're getting the rejection from the wick of the doji. Let's have a look and see. In order for me to get involved in shorts, I probably want to see a break in. We've had a break of structure here on the 1 minute, like so. We'd say that these lows have been broken to create this, but now I'd want to see price break this at least. If that was broken, then we would then look for a slight pullback and then we would get involved. That would give us our fractal entry in this market. We aren't seeing prices showing signs of rejection, but I think it's going to trade through. If price trades through, then evidently there's just not enough supply within the supply zone. How are we doing, Casey? You okay? Just waiting to see if we can get entry confirmation for this a short position here on GU. My longer term bias is to actually go long in this market to trade into a higher time frame supply zone. However, there is an area of demand here that price could trade into before taking us up and into the market. So it doesn't look as though price has traded through anyway, so that's invalidated that. Okay. Now what we want to see is for price. Has price broken that yet? No. Let's have a look and see. Is it coming to clear this candle, this entire candle? It's just a waiting game, man. Let's have a look. Patience is our virtue every single time. What I might do, I'm going to get rid of this line because it's irrelevant. I'm going to set an alert here just in case. I'm going to do some analysis on USD JPY. Let me just set an alert there. Perfect. Price breaks that, then we can potentially look to go short. Because this is the last fractal low. But there may be just enough demand in the market to continue to try trade price higher to break structure to the upside. If we head back up to like the 15 minutes, another 30 minutes, you can see that I'm wanting to see a break of structure here, price to then pull back. So in actual fact, what could happen is price continues trading us in a bullish way, breaks structure to the upside, then pulls back to trade down here to set a higher low, then trades us higher. Do you know what I'm saying? So that is a possibility as well in all respects. Let's just get I just want to see what this says. So you can see here that there's a lot of volume within this zone, as we have the session volume here for that. So that's great to see. That's good to see. Okay. Interesting. Yeah, we're seeing price trade above that. It's invalidated our setup, so it's a good job we didn't get involved on any preemptive positions. Great British Pound to JPY 15-minute chart, long price target 182. Let's have a look. Should we have a look at GU? So now when we look at this, it just shows, doesn't it, that actually. Where's my? I've got my headphones in the way of the screen. There we go. Price came down to trade into this, found more demand, price is now trading higher. Interesting. So now if we want to get involved in some fractal positions, let's just get rid of this and get rid of this, get rid of this. I've got this as an area of interest, so I'm actually going to move my alert and I'm going to put this here. See if we can take advantage of some buys. This trade is up. Break that structure. Let's have a look at USD. I need to close some of these tabs down. That was so annoying. This was Euro NZD trade yesterday. I got liquidated and then taken out of the market. We can see that price played out perfectly to that. And then we got involved in, this was a lovely trade. I was expecting bullishness from this demand zone. Price put in exactly that, but unfortunately it was like 2 o'clock in the morning. So I missed this unless it's at a pending order, but I'm not one to put set pending orders because I like to have further confirmation, essentially. And if I'm being completely honest with you, I probably wouldn't have been able to place a position on this market from that demand zone just because as price is traded in within 5 minutes, it's come to take us higher anyway. My take profit would have been set, if I was to get involved in a position from there, it would have been something like this. But my take profit would have been set just below the last high that was set. It would have been taken in fucking 5 minutes, which is amazing. But I would have had no entry confirmation, so I wouldn't have actually entered in that anyway, even if I was awake at that time. But that was a brilliant trade in itself. The Euro NZD short. I've actually got that. If we go here, a lot of the time when I post my analysis on TradingView, whenever I post the analysis, in the chat, it's always like this. Look, I think this was it. So I said I wanted to see price trade down and then trade higher. We took advantage of the short down and into that. That's that zone. If I go back here, you can see this is the zone 1.7664, 1.7689. We go back to this 664, 689. Yeah, so we got involved in the short to trade us down. You can see that price then traded down and into this and then up. That's exactly what my path tool suggested, and that's what we wanted to see. Now what we're seeing now is obviously demand is running out. I think it's going to trade down and into this supply zone. Then we're going to see price trade up and into this supply zone. So the short was perfect. The long was perfect. We missed the long position, but we got involved in the short, which was great. So that was that. There's loads of stuff on here. I always try and post my analysis on there. But yeah, let's have a look at USD JPY, and then we'll have a look at Great British Pound to the Japanese yen. I've tried to stay away from Japanese yen pairs. I just feel like obviously they can be lucrative, which is brilliant, but they're just so heavily swayed to one side all the time. We'll have a look anyway. Been a while. Looks good for buys. So you're saying that the US dollar, Japanese yen looks good for buys, right? Let's have a look. Yeah. So if the demand, so exactly that. So with this one, I'm looking for price to trade down into this demand zone, and then for price to go higher. Absolutely. So if you've got the 1 minute, if you can get onto the 1 minute time frames, then have a look at this. I mean, price could come to this doji here and then trade higher, but I've got this one marked out because this is the lowest one within this bullish impulse. So we'll just have a look and we'll just wait and see. Right, okay. So USD JPY looks good for a buy. I mean, to be honest with you, anything Japanese yen is literally like, whoa. Imagine. That looks disgusting. What? No way. Anything that's Japanese yen is pretty much, it's going to be bullish. This is what I'm saying. It's just awful to even like attempt to go long in this market, because it's just, I mean, we obviously know that these markets are going to provide us with bullish. It's going to continue bullish. It has been for the longest time ever. If we just have a look here, just looks horrendous. I was actually expecting a reversal from here, but price never did, and it's just continued scaling higher. But yeah, it's been bullish for so long. But further bulls, right? Let's have a look. Just want to kind of see what's going on here. That just looks nasty. That straight away just puts me off. I don't even want to. It's completely liquidated everyone. Anyone that was in on buy positions would have been shafted by that. I feel sorry for anyone that got hit by that. It's awful. Okay. Definitely see where you're coming from. We have this order block like that. Price is like putting in. It's like a flag, isn't it? I don't really trade like this anymore. But price is putting in like a flag almost. A channel trading down, take us higher. That's like the old ways of trading years and years and years ago. But yeah, no, I feel as though price will provide us with more bullishness. It's a bullish market. It has been for the longest time. It's I don't see it ending anytime soon. This is an area of demand. So yes, potentially we could look to go long from this demand zone. It would just be a case of waiting to see price trade in, waiting for a fractal break of structure to the upside. Once we are delivered with that, then we can obviously look to get involved in those buy positions. Clears all inefficient structure above, and trades us into the demand zone. So our trade would look potentially something like this. So it'd be like this to create a new low, to create a new high, lower high, lower low, lower high, lower low. Something like that, and then price will then break structure to the upside, breaking the last protected high. Price then pulls back to set a higher low, and then price then trades higher. We would aim to get involved after the break of structure based on the pullback that follows to set the first higher low within the new bullish impulsive wave. Like this. We would find an area of fractal demand from the impulsive wave that broke the structure to the upside. So our entry would look something like that. If I just get my long position, we'd have our long trade like here. Stop loss just below, a few pips below the zone we get introduced from. Our take profit can be set just below the previous structural high. Now, the reason why we do this is, yes, this market is bullish and it should, in theory, come to break that high to create a new higher high. But by setting it just below, it guarantees that our take profit can be achieved, yeah? Yeah, man, Casey, I'll have a look at Great British Pound to Japanese yen in just a second. I was just going over this one for Russ, so it won't be 2 seconds. But yeah, that would be my setup essentially. So continuation in bearishness now to trade us down and into this on the one minutes. and then I'd look to close those sell positions, prepare for those buys, wait for your break of structure to the upside, wait for the pullback into a fractal area of demand, and then get yourself introduced into this market. But that would be my setup, just like that. I will set an alert here, although I don't feel price will trade into this whilst I'm in this session, but if it does, then we can obviously look to get introduced there as well. And I'll get rid of that now as well, because we don't need that. We don't need that. We don't need that. We don't need that. And we don't need that. Perfect. Okay. GU, that's fine. Let's have a look at Great British Pound to the Japanese yen. Long price target 182.63. Are you in? Are you in at the moment? Because if you are, very nice. There is an area of supply here, so just stay vigilant. But are you in? Are you in at the moment, Casey? Nice, man, nice. Let me see. I'm just gonna have a little look. So 182.63 is your target. 182. Yeah, you have no issues. That's more than achievable. What was your risk reward ratio on this? I mean, it's gonna hit within the next few minutes, I'd imagine. What was your risk reward ratio on this? And I think, to be honest with you, I think you've set your take profit at perfect point as well, because there is an area of supply around here. So setting it just below that guarantees that your take profit can be achieved. So that's really good. I'm presuming you've moved stop loss to entry and you've taken a partial. There is actually a supply zone here on the 5 minutes. Just say this whole area. Because mate, if price trades through this area, then I would actually be tempted to probably hold positions or look to get reintroduced. Price is traded into this as well at the moment. This is another area. But price shows no signs of slowing down at all. Like 2-1. Really? What was your entry like? And your stop loss? How are we doing, Luca? I'll have a look at that in just a moment. Good trade though, man. Good trade. I mean, me personally, bro, I probably would have when I look to get introduced into the markets, I always go down to the fractal nature of the structure just so I can try and get more refined entries, essentially. Because it's I'm not saying it's a shame. I mean, it's still good that you've got a 1 to 2. Like, it's still 2 RR, but I mean, let me have a look. So it's traded right through. Your take profit is going to be hit any moment. I would just be hesitant for this. But I'm telling you now, brother, because what you need to look at as well, right, is this has been trading us in a bearish way, okay? If we look at this market, this has been trading us in a bearish way, right? So you set your take profit at 182.63. So 182.63. Let's just set it there. That's fine. So you set your take profit there. So this is a bearish market, right? Now, I'll just mark out these swing points just to show. Okay, as ugly as this looks, right? In the grand scheme of things, If price was to continue trading us in a bearish way, then I would suspect that price is only coming to clear this unmitigated candle here, right? Which is where your take profit is set at. Now, if price continues to trade and surpass that, Nasdaq 1000, imagine. If price comes, I'll have a look at that in just a moment, but 182, will the entry, USD JPY. Got everything going off now. One sec. But if price was to trade, like this is literally about to hit now, bro. But if price was to trade above this, then I don't see price stopping. It's going to continue trading in a bullish way. And if price breaks this high here, then it's completely flipping the current trend, which is a bearish one. Price is then looking to go bullish. Do you know what I'm saying? In which case, I would actually be tempted to hold the position, because what will happen is price will retrace and come down, but it will only come down to set a higher low. So presuming your entry was somewhere down here, you'd be absolutely fine in the position. But obviously that's completely up to you. But yeah, if price is to continue bearish, however, then yes, you've set it at a perfect point, and I would actually look to potentially go short from here. Because if we just get rid of this, and I'm going to get rid of your take profit, you can see here how prices, there's a clear order block here. Right there. This is an order block. If price trades into that, it's going to set its next lower high. And what follows, a lower low. We go short from that. We capitalize on that impulsive wave that's traded as lower. But let's have a look anyway. Let's just see. It'll be good. It'll be interesting to see how price plays. USD JPY. An alert went off on USD JPY. Let's see if price rejects. What I'm going to do is I'm going to set an alert, because I may look to go short in this market in a fractal position. If we get rejection, you can see how price has penetrated, and it's already showing signs of rejection to the downside, so that's good. But what I want to see is a break in a structural point. So I want to see a break in this structural low. I see a break in that structural low, then I'm jumping on board on some short positions after a corrective wave, obviously. So what market was it? USD JPY. My alert just went off. Oh, price has traded down into this. So now to look to go bullish, I want to see some kind of break of structure to the upside. So the last protected high within the fractal nature of the structure is this one here. Why is that doing that? That there. So I want to see that break. So now let's just set this here. Yeah. Let price grab all the demand it needs, break structure to the upside. We then have confirmation that this bearish correction is finished, and we can look to go long. So there's that. That we want to see price trade back, and then Nasdaq 100. Oh yeah. So I mean, if you have followed me, I don't know if you follow me, but if you followed me on TradingView, I actually posted to go short. Do you see where this supply zone is here? I actually posted to go short here in the market, and then we can see how price has delivered us with some amazing structure to the downside. So if anyone did get in short positions based on that zone, you should be in some very good profits, especially if you've held. I do expect price to actually continue to trade us down to the 8,000 point. This is pre-COVID. And this is because price has broken structure multiple times, and is trading us in a bearish way. So this is a higher time frame supply zone. Okay, so price traded up and into this, right? Price traded up and into this. So we go from here. Price traded up and into this. A shitload of supply was introduced. That broke the structure to the downside, which then flipped the S&D balance. Now more supply is in the market than demand. Price then came up. It set a lower high, being lower than this one. Price has now broken structure. Well, not broken structure, but it created a new lower low, lower than this one. So we've got a low, a lower low, another lower low, a high, lower high. What follows? another lower high. What follows after that? A lower low. So this is what I am expecting to see in this market. So what we are seeing now is price basically just accumulate in preparation to trade up and into one of two supply zones that I've got marked out, and I'm then going to be looking to take advantage on short positions from one of two zones. Whilst price is choppy like this, I have no interest in getting involved in any positions in the market while price is being choppy like this. I want to see clear structure in order to get involved. There are hundreds of commodities and Forex pairs to get involved in. There is no point in getting involved in a market when it's producing us with data like this. This is basically price accumulating. You've just got to imagine that when we see like and it's funny, right? Because when you go on YouTube and you look at all these videos and people go head and shoulders, triple bottoms, triple tops, all of this malarkey, it's all just means the same thing. All price is doing is accumulating. So price is just coming down and it's building and building and building and building demand until enough demand is being introduced and enough supply has left the market, and then price shoots up. That's all it is. So this is price has come down because there's more supply than there was demand. Price is now picking up more demand. Supply is being removed from the market, and then boom, price will shoot up. Price will then shoot up, trade into one of these. That will then flip the bias again to the downside. We get involved in shorts. So for me personally, I'm not looking to get involved in this market at the moment. I'm just going to be patient and wait for price to trade into one of two supply zones. But if you want to go ahead and mark out these supply zones for yourself, by all means do so. You'll find them. I mean, you've got the increments there, but you'll find that I think is it on the. Let me just double check. It's probably on the. Well, I mean, you can see this whole area of supply there, but I think it's on the 30 minutes that the candles present themselves. So you can see the hidden. Supply zone here. When you see two wicks like this, right? There's bullish structure within that. Okay, and as we go down on time frames, if I just press the replay button, we head to the 15 minutes. No, 5 minutes. The candle shows itself. Do you know what I mean? So it's just about going down on time frames or understanding the higher time frame candles, understanding higher time frame candlestick formations and what they mean. So if we go to like again here, you can see the same thing: wick to the downside, wick to the upside, wick to the downside, wick to the upside, and then when we go down, can I adjust this just so it doesn't skip me away? 1 minute time frames. You can see the bullish candles find themselves basically. You find the bullish candles. So yeah, it's just about understanding open and close of the candles, and that will help you with your supply and demand zones. But yeah, I'm definitely looking to go bearish longer term in this market. There's no harm in looking for buy opportunities. As you can see, price is trading us in a bullish way now, and it's trading us up and into these areas of supply. So if you wanted to get involved in buys, just be sure to either take profit from here, or if price trades through it, take profit from this one. Are there any other markets that I can go over? How long have I been streaming for? I don't want to be streaming too long today. I've got an hour. Okay, so I'll spend like 10 more minutes, 10, 15 more minutes, and then I'm going to call it. So if there's any markets that you want me to go over, let me know now. You can see how price is traded in, and it's given us rejection to the upside, so this is good. We just need to wait for the right entry confirmation. I want to see price trade down into this with the Euro NZD, and then I'll be looking to go long. Oof, that would have been nice. That was for the top down. That was the case study I've just filmed on the XAU USD market. Again, I called short positions from this area here, and prices played out beautifully. You know, high time frame zones that I mark out usually work out to a T. Usually play out to a T. Great British Pound USD 15-minute chart, long price target 12276. 76. Yeah, nothing wrong with that at all, mate. Nothing wrong with that at all. Price is going to continue to trade us higher, break structure to the upside on the higher time frames, and then we're going to see price put in a rejection downwards. Because what it's basically going to be doing is just setting that higher low. Do you see what I'm saying? So if we look at this, right, we've had clear bearish structure. Yeah, this is the last protected high within the bearish structure. Why? Because this high here created this low, right? Now you would say, oh, well, actually, it's this one here, yeah? But this is actually within inside the impulsive wave, right? So, because when we look at this structure, what we do is we go from impulse, correction, impulse, okay? This is how we don't look within inside it. We look at the overall structure of the market. So then when we see a break of structure in this high, it's the last protected high, yeah? So something like that. We understand that price is no longer following the laws of bearish structure, lower highs and lower lows. It's now following the laws of bullishness. So price is going to come down to set a higher low, higher than this one, and then go on to set a new higher high, which is going to trade us up and into this, right? Then supply is going to be introduced. We can look to then continue to go short in the market. But no, price is playing out well. I was expecting at the start of, if you rewind the live afterwards, I was expecting price to actually trade bearish from here to trade us down into this demand zone and then break structure to the upside. But evidently, there's enough demand in this market to break the high anyway. So that's not a problem at all. Price is having no trouble with this this area of supply either, by the looks of things, which is good. It'll just be good to actually get involved in shorts when we have the break of structure to the upside, because we understand that every correction, every impulse follows with a correction. And now when I look at this as well, on the 30-minute time frames, there is actually an order block right here. So this would be another area just to keep in mind. That red candle. But Casey and Luca, is there anyone else on that? If you've not got me subscribed on YouTube, go to YouTube and subscribe, because I post videos. I literally just filmed, as I say, a case study video on XAU USD. So I go through a full top-down analysis on that market, basically showcasing my shorter-term bias and longer-term bias. And then I do Sunday sessions videos every Sunday. So I basically do a full market recap every Sunday, giving my analysis on the markets and what I believe they're going to do. So again, it just allows you guys to get a better understanding on where price could take you in the coming week. Is there any other markets that I can run over quickly? Or is there anything like, are you unsure about anything? Like, do you understand what an order block looks like? Do you understand the laws of structure? Do you understand risk management? Do you understand the importance of risk to reward ratios? Do you know how to calculate your lot size? Is there anything that anyone is unsure about? Is there any questions that anyone has? It doesn't have to be Forex related. Any questions at all? Asking questions is obviously really. Do you trade stocks? Nope, I don't. Originally, I mean, many many years ago, um, that's where I started. I wanted to trade stocks. I wanted to trade the stock markets, and then as I as I became, you know, as I actually did my due diligence and started to look into trading in general, I realized that trading stocks wasn't as lucrative as I thought it was. And actually, trading Forex and trading these commodities like gold and things of that nature are a lot more lucrative. Um, so no, I don't. On top of that, as well, like supply and demand zones and things of that nature, my actual strategy and what it's all based on. I suppose with stocks, it can just completely like. I suppose it's the same with anything really, but I feel like um, it would be maybe worse to an extent. It wouldn't maybe flow as well. 'Cause I suppose stocks and shares and things of that nature are quite heavily based on fundamentals. And I'm not saying forex isn't, and neither with commodities and CFDs, but um, this is still based on technical analysis as well, just because there are so many retail traders, institutions, and banks that are trading them. Oh, how did you? Oh yeah, so you're just on. You're actually on. Have Have you did any challenges? No, mate. No, unfortunately. Well, not unfortunately. No, I've never believed in them. To be completely honest with you, if I'm being, if you want my true honesty, I feel like they're just a massive affiliate scheme. Um, I have clients that have done very well with funded challenges and are doing very well with funded challenges, but I can't help think that they are all just massive affiliate schemes. In the sense that, like, I mean, look at my forex funds, for example. They were giving people payouts based on the money they were making through failed challenges, right? And everything was all fake. They were basically trading against themselves, so they were making making market conditions to how they wanted to. They were manipulating people's trades and things like that to take people out. I just don't really believe in it. It's just like the whole thing around it, like we want to help you help us and all that bollocks. I just like the thought is there, and like it could really work, but I know people that have looked to actually open up prop firms, people that have been trading the markets for many years, and they've gone over to Dubai to set up prop firms. Like, I genuinely know people on a personal level who have done this, and they've turned around and said it's just a massive facade, it's just a massive affiliate scheme. So no, me personally, I don't recommend them. I don't really rate them. If you want to make Forex work, then make Forex work by learning how to trade properly and being patient, compounding your account and investing regularly. So look at it this way, right? If you are someone who goes to university to get a law degree or become a doctor, it is a skill that's going to take 5 6 years um, to master, right? So you should at least give yourself that time to try and master Forex, right? Now, when you have found a strategy that works and you have a trading plan in place, just implement that every single day and stick to it once you have that consistency there. And then when it comes to obviously compounding your account, let's say, I don't know, if you had a target to make, some people can't make 10% a month, and you're not going to be able to make 10% a month when you first start, but this is if you're following the correct risk management, obviously. But if you can aim to make 10% a month, in time, your account will accumulate to the point where you are making a good wage. A lot of people will come to me and say, how much money can I make on a month-to-month basis? And I say, look, realistically, a lot of people who try and get into Forex don't have a lot of money to invest. So unless you have £10,000, $10,000, whatever currency it is for you, unless you have £10,000 in your trading account, you're going to be making less than £1,000 a month, and that is if you can reach your target of 10%. 10% of 10,000 is 1,000, right? So if you can set an aim to make 10% a month, that's brilliant. But you have to actually make that 10% a month. Do you see what I'm saying? And plus, you have to have the equity in there to do it. Now, let's say that you're starting with £500. Then I don't know, or £1,000. Let's say you start with £1,000, which is quite relative. It's quite a reasonable amount. You would be making £100 a month from making 10%, right? But just look at it this way: at the end of month one, you are now 100. So you've got £1,100, yeah, from 10%. You are now starting month two with £1,100. So then, if you make another 10%, you are then making £110 because that's 10% of 1,100. So you are now starting month three with £1,210. Now, again, if you make another 10%, do you see where I'm going with this? It accumulates. So now month three, you're making £121. Yeah. And what's happening is it's constantly accumulating, right? So whereas you started where 10% was only £100, by month three it's 120 quid or 100, and so on and so forth, and it grows and accumulates. And another thing as well is if you are regularly depositing funds into a trading account, money that you can spare, you're going to quickly grow it. Do you see what I'm saying? A lot of people will will just deposit an amount as a one-off and then not deposit anything else. But I would regularly deposit if you really want to grow your account and you really want to make good money. About hiccups, and you really want to make good money, that's what you need to be doing. And another word of advice as well in terms of depositing funds: only ever trade money that is seen as tangible. It's as seen as I can't even think today. Like disposable income, money that you don't need. Yeah. Because if you have some kind of an emotional attachment to the money that you're trading with, you are going to put more pressure on yourself to actually make something from it. But if you're trading with money that you don't really care about, it's money that's just, it was going to go on a pair of shoes or it's going to go on something that doesn't really matter, then you're not going to have that emotional attachment, and your psychology when you're trading is going to be a lot better. You're not going to be under much stress when you're placing the positions because the money is irrelevant anyway to you, to an extent, obviously. What about gold? Gold, I've literally just done a case study on gold, Luca. So if you've not subscribed to me on YouTube, subscribe on YouTube. I'll be posting that on Monday. It's a full case study video. It'll be about a 20-minute video, and it'll be like a full top-down analysis, basically, on the markets. On gold. But yeah, I hope that clears some things up for you, Casey. Anyway, I don't know how long you've been trading for, or how much experience you have, but I think it's important to know all aspects of trade, and a lot of people can get quite quite caught up and just wanted to make money from it. But it's important to know and do your due diligence and understand the markets to a greater extent. Yeah. Been studying for 10 years. Oh wow. Well, all of what I've probably just said makes complete sense to you then. Has anyone got any other questions before I call it a day? And as well is, yeah, it does good stuff for almost 2 years, but I'm still struggling. Oh wow. What aspects are you struggling in? But you still have way more knowledge than me. I mean, I've only been trading 7 years, mate. But yeah, I it's been my pride and joy. Realistically, it's what I've put all my time and effort in. Yeah. If you guys have any other questions, I'm more than happy to answer them before I go. If there's anything you're unsure about. What are you struggling with, Luca? Is there something specific you don't understand? Is it just finding the consistency? What is it that you're struggling with, bro? Just gonna go and get a jumper 1 second. It's cold in England today. It's boiling the kettle. I like doing this as well, like just actually like speaking. Do you know what I mean? Speaking to people and just being able to answer any questions that you have. I feel like it's all good and well me showing you trading opportunities so you can make some money, but actually helping you guys get a better understanding on the markets, I think, is just as important. My trading psychology is not consistent. I don't know why. Okay. So there's the main thing for me, right? I mean, what I can do is I've got a whole PDF on trading psychology. Um, I think a big thing. I'll be completely honest with you, right? There's a lot of things that come into aspect. One is your personal life. I don't care what anyone says. You can be profitable in trading. You can have an edge. I make money in some way, but lose it. Okay, so let me just run you through a scenario, and let me know if this is something you do. So you'll make some money in a day. I don't know. You'll make a few percent, and you're happy with it, right? But you want more. Yeah. So this is the first problem. You've made money in the trading day, but you want more. That's a sense of greed. That's something you shouldn't really. That's something we need to sway from doing and sway from being like, we should only be placing positions if a setup is displaying itself. If it's not, we should not be forcing trades. So that's the first thing. You've made a bit of money, or maybe you've lost a bit of money and you're trying to make up for those losses. Let's say you've lost a small amount of money, but that's frustrated you, that's pissed you off. For one, we shouldn't let it be pissing us off, and we shouldn't be letting it annoy us. And secondly, we should not be placing positions to try and make back on a loss. We should only be placing positions if a trading setup displays itself. Yeah. So we have two ends of the spectrum. It's either greed, you've made a bit of money and you wanting to make more because you've had a taste of the money and you want more, which is fine, and I understand that, but we should only be placing positions when we have the right confirmation to do so. And then secondly, you've lost a bit of money and now you have that feeling of frustration and you want to make back and make back from the positions. Now, when it comes from a place of frustration or it comes from a place of greed, you are never going to win. The markets are going to beat you every time because you're not making the right decisions. You're making decisions based on emotional impulses, which is not what you want. You need to have a level head and you need to base your decisions and the decisions you're making from what the market is telling you, not from an emotional standpoint. So whenever you feel that an emotion is taking over and an emotion is controlling a decision, walk away from the screen. Don't even look to place a position because you're not in the right headspace. You should only be placing positions because you are seeing that your bias, your trading setup is playing out. You have multiple pieces of confluence. You're trading with the prevailing trend. Prices tapped into an area of supply and demand. We've been delivered to the break of structure. We've had all of these pieces of confluence that are suggesting the same thing. Only then should we be placing positions. We shouldn't be placing positions based on an emotional impulse. Secondly, you lose a trade, so then you try and make back from it by then placing in the opposite direction. That is a big no-no. Never ever do that. If you have had a bias to go long in the market, and then the market goes short and takes you out in the position, that's absolutely fine. Go back and have a look and see why that's happened, right? Because there's obviously a reason as to why that's happened. The markets do things for a reason. Everything happens for a reason everything happens for a reason in life anyway, but especially within the markets. Price trades into certain areas and does certain things for a reason. So go back and see why. Don't then go, right, I'm then going to press short, because it may have been that your bias was right and the market is going long, but it was just coming down to clear an area of demand before it trades higher. So then what you've done is you've placed a long position, lost on that because the market's continued going short. So then you've shorted, and then price is then actually ready to go long. And then when it's gone long, you're in on the short position and you've been caught out twice. Do you know what I'm saying? And then you're really frustrated. Do you know what I mean? So if you would just not let your psychology or your emotions get ahead of you, you wouldn't have lost twice. Do you know what I mean? You would have just lost once, maybe reassessed the situation and actually re-entered in the right direction as you were for the first time, and then gone from there. So a lot of things is obviously based on emotions, and it's usually driven by, it can literally be by, as I was saying at the start, like by your personal life. Do you know what I mean? If you've woke up in a bad mood or something's happened, you've had an argument with your partner, or I don't know, something's happened in your personal life and it's put you in a certain mindset, then that is going to affect the decisions you make as well. It's like they always say, like, don't make decisions and don't say things when it's not coming from a place of your mind. You know, when it's coming from a place of emotions, don't, because it's never usually what you actually mean. Do you know what I mean? And it comes the same with trading. But I know I have a whole PDF, so I'm more than happy to send that over. Just drop me a message, and I'll just send me a message on here, and I'll send it over. It's a long PDF, but it's worth reading realistically. And secondly, like, another thing to really alleviate any emotional trading is being confident in your trading ability. If you have a set trading plan with a set strategy, your emotions shouldn't really get the better of you, because bless me, your emotions shouldn't really get the better of you, because you are confident in your trading strategy. So if the trade goes wrong, then it's literally just because the markets are going against you for a reasonable reason. Do I trade the NAS? Yes, I do trade the NAS. And thanks for joining, man. I've kind of done my analysis for today, but I can run over the NAS for you if you like. I was just kind of having a conversation based on psychology for the guys over on TradingView. But yeah, I would make sure that you have a trading plan, a trading strategy in place before obviously placing any kind of positions in the market, because that's going to alleviate a lot of the psychological problems that people have and the emotions that get involved in trading. On top of that, I see nice broke previous daily high and look sell. Can you see? Yes, bro. So the NAS I'm shorting. I'm shorting, and I have been shorting for quite some time. I'll show you now. I went short from here. So I'll run through my analysis quickly, and then you'll see why I've gone short and why I have been short in this market. So this market, let me go down to daily. I go up to daily. So this market, right? This is a bullish market. Yeah, we can agree that the NAS is a bullish market. It has been a bullish market for forever, essentially. What we saw is price came down to set a low. Okay, now when price came back up, we saw that actually price was rejecting from an area of supply. Now, when I go down, I think it was on the, let me just double check. I think it was on the 4 hour, was it? Was it a 4 hour demand zone? Let me just double check here. Supply zone. Yes, so it's a 4 hour area of supply, and what we saw when I did my analysis is that price was rejecting from this nicely. Now, to build to my bias, I would never just place a position blindly based on a penetration of a supply or demand zone, but as we go over, you'll see price traded up and into this area of supply. What I did is I marked out the last higher time frame protected low. Yes, smart money concepts. I don't do ICT. I don't do fair value gaps and things of that nature. I base my trades purely on supply and demand. The only things that are important, in all honesty, mate, is supply and demand, structural laws in the market, and just using the correct risk management. But yeah, price action and supply and demand. But no, I marked out so price. So looking at it this way, yeah, price was trading in a bullish way, trading up, creating highs and lows. Price then traded into an area of supply. Supply was introduced that encouraged price to trade lower. Now, if the supply and demand balance was still in, if the demand was still higher than the supply, there was still more demand than there was supply. This protected low here shouldn't have broken, right? Because what happens in bullish structure, as we know, we have higher highs and higher lows, right? Now, when I say a protected low, the lows are protected because they never break. The highs break every single time, yeah, to create a new higher high, yeah? So when we then see a break in a low like this, what laws is that following? Well, that's following the laws of bearishness, because in bearish structure, we break the lows and we protect the highs, yeah? So when I saw a break in this protected, let me just call, what is going on? When I saw a break in that protected low, that told me that the supply and demand balance had flipped and it was now in favor of supply, right? So that was the first thing. For one, we had a break of structure to the downside, and that was after a penetration of a supply zone, yeah? Now, the next step for me is to then look at the impulsive wave that broke the structure. So I look from here down to here, because that's the impulsive wave that broke the structure, right? So what I do is I then zoom in, and I look at the impulsive wave and I try and find any areas of fractal supply. Why do I do that? Because what I want to see now is for price to set a new lower high. Why do I want to see price set a new lower high? Because the new trend is a bearish one. And in bearish structure, we have lower highs and lower lows. So price should trade back up to set a lower high before it goes on to set a lower low, right? So I did my due diligence, I did my analysis, I looked through this entire impulsive wave, and I managed to find an area of supply. Price traded up and into that area of supply. What do? I then zoom in. I look at the last protected low within the bullish structure that was trading up. So we could go as high as this point here. That was the last protected low within this bullish structure. Price then broke that last protected low. So we have another break of structure to the downside. Again, what do we then do? Well, we look at the impulsive wave that broke the structure, and we try and find another fractal area of supply, right? So then when we try and find another fractal area of supply, why are we looking to do that? The reason why we're looking to find another fractal area of supply is because this is where price is then going to set another lower high within this time frame. So then price trades up. I found a fractal area of supply here. Price traded up. I got involved in short positions, and then the rest is history. So I look for 3 penetrations of a supply or demand zone, and I look for 3 breaks of structure. I've got the break of structure. Whoa. I've got the break of structure here. I've got a break of structure here, and then I had a break of structure. I had a break of structure here as well, and then got involved in this market. So that was 3 breaks of structure and 3 penetrations of a supply zone. 1 being the highest of time frames, 2, and then the third supply zone here. Does that make sense? So and then just to further build on why I wait for breaks of structure and things like that. The first break of structure confirms an end to the higher time frame bullish correction, the higher time frame bullish trend trading into this. The second break of structure here confirms an end to the initial pullback, the initial corrective wave for this new bearish trend. So this is the first correction, basically, and the break of structure there confirms an end to that. Now, the third break of structure to the downside then confirms the end to the fractal corrective wave after the break of structure to the downside, if that makes sense. So we wait for 3 breaks of structure, 3 penetrations of supply demand zone. Then price obviously traded lower. And as I say, mate, price has played out beautifully as of recently. What we're seeing now is price, and then to further build to this as well, you can see how we have a high set, low, lower high, lower low. Price is now coming up to set a lower high, probably from here or here. Once it comes up to set a lower high from one of the 2 zones, I'm then looking to go short again, trading price lower in the market. So what we're seeing here is price accumulate. Price accumulates and distributes. It accumulates when it's in preparation to trade higher. If you were here at the start of the live session, you would have seen that price was down here. I was saying price is going to trade us higher. Price is now trading us higher. I've got these areas marked out as areas of supply before trading us lower. The reason why I've got these areas marked out is because these are areas that I see price trading into to set the next higher time frame lower high before trading us lower in the market. So I'm not going to get involved in any buy positions because we're trading against the prevailing trend by doing that. I will be waiting to trade the market short from one of 2 supply zones. So that's my analysis and my setup for the NASDAQ. But yeah, this is an extremely lucrative market, and I have made some good money from it. But yeah, I hope that kind of makes sense. Makes sense. Clear explanation, man. No problem, man. Do you have a Discord group? Would love to learn more. I don't have a Discord group. I have a Telegram group. I have a Telegram group which kind of acts like a Discord group, I guess. So you can join that if you want. And in there, there's like obviously a section within the. So I have multiple groups essentially. I have like a learning lounge. Oh no, absolutely, bro. I know. Do you know what it is? I mean, me and James, who also does videos on this YouTube channel, I think what it is we just have a better way of understanding it, a better way of explaining it, because we have probably a better way of understanding it. We may be a very small YouTube channel, but I've been in the industry for. I mean, this is all I know. Do you know what I mean? This is all I've ever done. You see, so for me, it's like I have done my due diligence and I have done a lot of research in it over the years, and a lot of things is as well, like people don't people don't actually understand the reasons why price does the things that it does. Yeah, price people just say, oh, price has done this because it's just done this, but there's reasons as to why price does things, why it does the things it does, and a lot of people don't actually understand the real reasons as to why price does what it does. NAS 100 2 hour chart, long price target 4986. I see price going higher, mate. Casey, price will trade into one of two supply zones before trading as lower, 100,000,000%. I mean, just looking here, this is the last area of supply. We've just refined it. But then there's also gaps in the market. So for those of you who is into your ICT, you have your fair value gap there. Do you know what I mean? I've just refined it to a specific order block. Naz gave M1 charge and MB. Would you trade past 12 New York PM? Or is it wise to stop trading PM session? So I'll be completely honest with you, bro. When it comes to trading based on sessions, I would never say. So for me personally, right, if I was gonna get involved in a market and a market gave me a setup, best believe I'm going to trade it. You know what I mean? Regardless of what session it's in. It doesn't. The session doesn't matter. Everyone, institutions are going to pick up on the same. Are going to pick up on the same order blocks, and are going to pick up on. They leave footprints behind on purpose. Do you know what I mean? And they just pick up on it. So for me, no. I mean, for me, yes, I would. I would. Sorry, I would. I would. I would. If a position was ready to be placed, and I had all parameters were met to place the position, I'm going to place the trade, regardless of the time session. Because yes, there may not be as much volume being introduced as we leave the New York session, with this being the Nasdaq. Yes, we may not have as much volume being introduced, but why does that suggest that the market isn't going to continue going in the direction that we want it to go into? You've got to remember that imagine that there is orders being ready to be opened from here. So not only are there orders that are ready to be opened, short positions that are ready to be opened from these zones, let's say, but people are probably looking to take profit on any buy positions that they've placed as well. You could look at this and say, right, the smartest way to go to place positions when it comes to take profits and things of that nature. Let's just say that you went long from here. Yeah, I would set my take profit below this low, and my stop loss below that low, should I say, and I would set my take profit just below the last high set in the market. Why? Because that guarantees that my take profit can be achieved. Because if this is a bearish market, yeah, then realistically, price shouldn't come to surpass this high. So therefore, I should set my take profit below this point. So I would always set it here. So you've got to imagine a lot of buy orders are being closed and a lot of sell orders are being introduced from those zones. Don't be sorry for all the questions. It's good that you're asking questions. As your higher time frame buyer, or do you include? Are you using? So, if you want me to be straight up with you, I use every single time frame. I go from the weekly right the way down to the 5 and 15 minutes. If you have looked at my this is the thing, bro. So this is the thing, and this is what. Like I've got so many one-to-one clients that I do sessions with, and the first initial session that I have with them, they're like, "Nah, this is bullshit. There's no way that you can do that." But then when I show them that you can do that, and I've got proof on TradingView, they're like, "Ah, right, okay, that's fair enough." So for me, I will look at the higher time frames, going as high as the weekly, daily time frames, because what that does is that tells me what the overall structure of the market is doing, and it gives me a bias. Yeah, we always want to be trading with the prevailing trend. The reason why we want to be trading with the prevailing trend is because that gives us a higher probability of being successful. Why? Because there is more traders trading in that direction. So we want to be trading with everyone else realistically. The trend is your friend. It's a common term we want to be using. We want to be going and trading in that way, right? So I always start at the weekly, always start at the daily, just so I can see what's going on. If the market's going down, I'm trading it in a bearish way. If the market's going up, I'm placing those long positions. As soon as I've done that, then I do my due diligence, and I go down on time frames, and I do a full top-down analysis. What was your first 2 years in trading? Were you profitable? No, I wasn't. I'll be honest. My first 2 years of trading were hell for me, in the sense that so obviously you've got to imagine. I mean, obviously you've not been you've been trading 2 years, haven't you? So smart money concepts and things of that nature have been around, but no, I wasn't profitable. 7 years ago, right? There wasn't as many people doing this. 7-8 years ago, there wasn't many people doing this, but there was a few people that were very, very big in this industry. Adam Coe was one of them. Adam Coe was a traditional trader, and he placed positions based on support and resistance, channels, things of that nature, right? Now, the issue with that is now when 7 years down the line, and I come to understand is they're just other terms for other meanings. So it's like you're being swayed away from what things actually mean, right? So I learned a style of trading, I learned a way of trading based on support and resistance, and I would trade breakouts, I would trade reversals and breakouts, which worked, and I was profitable. But that was probably after the 2 year mark, because prior to that, I was in like a group online, and they basically didn't know how to trade, and they swayed me in the wrong direction, and I ended up losing a lot of money. And it was only after that happened that I thought I need to take my own initiative and actually learn how to trade myself, which is when I then started to read books on trading and started watching Adam Coe videos. But Adam Coe was the guy that really got me into trading. I can literally remember sat there watching endless amount of videos of his, learning how to trade. And then eventually, mate, I literally just started. I started backtesting and doing my own thing. I was hoping to reach profitability within 5 months. I'm 3 months in right now, studying day and night. It is such a long process, brother. It is such a long process. But you know the best thing, and this isn't me saying this because I am a mentor, but having a mentor and having someone in the industry that you want to master is the biggest help. Is the biggest help. So I would watch through all my videos, join my Telegram, and just ask as many questions as possible. That's the best thing you can do. And then if you want one-to-one sessions, obviously get messaging and get booked in. Do you know what I mean? But in all honesty, bro, just to carry on doing what you're doing. Like, watch as many videos as possible. I think it's important as well to find this is the issue. See, like, you're not going to know what's right and what's wrong. It's all going to come through practice in that sense. If you can find someone that's what's the word, has a good track record and is like, I can show you my I've got thingies of like let me show you this. One sec. I've got my track record, and I have that. It should be in my, may not be in the comments actually of this YouTube video, but in all my other YouTube videos, there's a link in the description with my track record, because I'm 100% transparent. I have no reason to bullshit on my success and how well I do. Do you know what I'm saying? So it's there. You can see that I lost 2 trades this week. You can see that I lost 2 trades last week. You know what I mean? It's I'm 100% transparent. Let me see if I can find this. 1 second. Let's have a look. I think it's so important to like find people that are honest and transparent as well, man, because there's not a lot of people that are open. So you need someone who's got a good track record. On top of that, I what's it called? I've been vetted by I don't know if you're from the UK, but I've been vetted by like Unitasker, Unidays. I'm supposed to be doing work with them. I'm actually on their TikTok account. I've been vetted by the BBC, things of that nature. So it's not like, you know what I'm saying? I might be a small YouTube channel. I might be just a normal geezer, which I am. I'm just a normal guy. Do you know what I mean? But yeah, I've put my all into it and I've made it work. Let me see if I can find this now and just show this. So I've got a MyFX book, which is one thing, and then I've also got this as well, just to show every single position that has been sent out. I need to update it. That was what was the last day I did up to trading data sheet. So it goes up to the 22nd of September, but I've not actually been placing too many positions anyway because I've just been busy with finding a property, but finding a new property. But let me show you this. And this is accessible as well. If it loads, just give it a second. Right, there we go. Okay, so what I've done is I've gone back. This stems back all the way to the 27th of the 6th, 2022, right? Starting with £1,000, starting with £1,000 account, and we're now up to present time. Yeah. Now in this, you can see. I mean, you can see my track record here recently. There's a lot of losses. I'm going to be open about it. It doesn't bother me because the wins massively outweigh the losses. I risk 2% of my equity per trade. I always have done, and you can see that every trade has a 2% loss, but my winning trades 13%, 5%, 7%, 9%. So a 2% loss is nothing in comparison to the wins that I'm making on the positions. Right now, 13% is only what is 6.5 RR. 6.5 RR is more than achievable. If you've got a 1 to 6 RR, there's your 6 RR. Right now, if we go to trading performance overview, you can see the scale, and you can see that yes, it's all linear. So there are times where there are dips within my performance, which is going to happen, and where things kind of are scattered for some time. I've not been performing too well, and times that are low. But what you've got to look at is your overall trading performance. It's hard to say, right, I'm successful because I've been trading. I've got a month's worth of data. Yeah, I'll be straight up with you. I place maybe 3, 4 positions, 5 positions maximum in a week, and that's just because I wait for trading opportunities to present themselves to me. Yeah. So here you can see my buy to sell ratio. I'm very much a bear in the markets rather than a bull. You can see my win to loss ratio. So this shows that at 48 positions, 48% of my positions are winners, 28% are losers. So that gives me a 72% win rate. My win rate was actually just short of 75%, but it has actually gone down recently. But we've still got a 72% win rate. That's not bad, especially considering the risk reward ratios that we implement, as well as our risk management. Okay, so you can see here. Break evens I class as wins because we didn't lose anything. Wins are obviously wins, right? So this obviously just shows the markets I trade the most. XAU USD is something I love to trade. GU, I'm in the UK. I trade the Great British Pound to the US dollar market every single morning. Well, try to trade the market every single morning. Euro USD is another one of my favorites. So that just shows kind of what I use on a day-to-day basis. But yeah, like that's my trading thing. This is just like a thing that I basically created just to kind of display my trading performance. But you can see here, you can see my trading history, and you can see how I've performed as of recently. Actually, I need to continue to fill this out because it only goes up to the 22nd. I can show you. Again, I'm fully transparent. It doesn't bother me. Do you know what I mean? I know myself I'm successful. I have been for past 5 years. I'm more than happy to show all proof in my work. Let me get my Telegram up. So like here, so this is like the group. This is like the chat where we all just talk about stuff and put our analysis in and have a bit of a natter about how we're doing and the profits we're making, things of that nature, news and stuff. So we speak on there quite often, which is good. There's a few regular speakers. There's some people that are a bit quiet, but yeah, that's obviously there. We have. This is just a general. This is another chat basically that we have in there. So that one's based on more forex analysis. This one's more of a conversation one, although people just seem to use this one. Risk management. I've got like risk management stuff. So there's a formula there that I use to figure out my lot size for every position I place, because it's very important that we use the same risk for every single position rather than altering our risk for every trade. This is just a video based on taking partials and SL moves. It's very important to take partials throughout your position. I usually take a partial after 3 RR, and I'll explain why in a second. This live wasn't supposed to be as long as it is, but there we go. How to take partials. That's again just another video on partials and how to actually take them. And this is again just more videos on when and where to take partials and when and where to place positions. Basically, fundamental news. I put some fundamental news in there. I've not actually put anything in there. I've actually been posting it just back in this one. It's not updated for some reason. It's not updated. Oh no, it has updated actually. So I've just been posting my news in this one just so everyone can see it. And then we just go back to this. The ambassadors program, which is irrelevant for you guys right now. This is just showing my strategy, a quick video on my strategy. That's just obviously the services that we offer. And then the performance, you have access to the performance sheet. And then this is the VIP chat. So we didn't end up placing that position. It was ready to go, but we didn't place it because it didn't set out for us. Those are the 2 positions we've lost this week. This is the position we won. And I'll show you the befores and afters of it. I give full updates on all the trades. So I did a refined entry as well as a less refined entry, just for those who wanted to be a bit more aggressive and ones that wanted to have a safer approach. Sorry, it disconnected for some reason. Just making sure it's still back on. Is it still on? Yeah. The reason why I had a stop loss above here as well is just because there was an error supply here. So I wanted to make sure that we accounted for that if for any reason price decided to trade us lower. So that's obviously to start to finish basically, and I give full updates and how the trades played out. But this, you can see here, this trade gave us 6.5 RR and 13% risk and 2% of my equity. So 2 losses, so that's 4% loss. I've made 13% from that. I'm still up 9% for the week. Can anyone tell me about scalping? Yep. I mean, to be honest with you, I could actually do a video on scalping. Scalping is just basically trading on the lower time frames and just integrating your own strategy with it, essentially. You've just got to be very careful with scalping because obviously it's so fast paced. And you've got to have a great understanding on what the higher time frame structure is telling you. Just make sure that you're trading with the prevailing trend and make sure that you're trading towards the higher time frame bias, whether that be it's trading into a supply or demand zone. But yeah, these are just like, I mean, you know, I basically do videos often and trades all the time. This was another euro trade that we placed. How well did this one do? I think we got like 14 RR from that, and then this is another loser. Do you know what I mean? A losing position. I need to update the doc sheet basically. But yeah, full transparency, and I give so much information and go into great detail with my analysis. I'm not one of those who's jog with my analysis. Do you know what I'm saying? But yeah, if you have any questions about that or about my trading history, then let me know. Let me just move this back over here because we don't need that. There we go. If anyone wants to tell me about scalping. So, I mean, in terms of scalping, look, right? So, if anyone was here at the start of the video as well, I said about going long from this area. Luca, you were here at the start, and so was Casey. And then I don't know who was here at the start on YouTube, but that was an area that I gave to go long from. And prices played out perfectly with that. But that's scalping Umam. I hope that's how I'm pronouncing your username. But yeah, we are literally on the 1 minute time frames here. We just understand that the higher time frame bias is to trade higher because on the USD JPY it's a bullish market. So we just wanted to take advantage of the next bullish impulsive wave. We understood that price was putting in a correction. As soon as price traded down and into this area of demand, we wanted to see price or demand be introduced and for price to flip to the upside. So in all respect, we could have been preemptive in the sense of placing positions based on the penetration and rejection of this area of demand. Or if you wanted to be safer, you could wait for a break of structure to the upside, being this here. This would be the last protected low within this, the last protected high, should I say, within this bearishness. We want to see this break. Once that's broken, we would then look for any areas of supply, any areas of fractal demand within this here. But yeah, I might do a scalping video, because a lot of people have been asking about scalping, like scalping in general. So I might do a scalping video. Does anyone else have any questions before I call it call it a day? I was supposed to go. I was only gonna do an hour, but no, I appreciate everyone asking questions. It's nice. It's nice to answer any questions that you guys have. I find it's more engaging and I think it's better to actually, rather than me just blabbering on with my analysis and you guys just watching me do my analysis, it's nice to answer questions and cover anything that you may be unsure about. But yeah, if you guys have any questions, let me know before I go. No problem at all, Luca. No problem at all. I've not done a live in ages, so it's been nice to jump on here and do a live for everyone. I'll join your social medias. Yeah, no, literally just check out. Yeah, just go onto my YouTube. Let me see if I probably get a bollocking for sharing my YouTube link. Just head over to my YouTube and there's you'll see all my videos there, Luca. Thank you very much, Wisdom. But yeah, any other questions before I go? I'm going to shoot in a second. Let me just double check. Your live was very efficient to me. Thanks. No problem, brother. My pleasure. Luke, what is your prognosis? We're going to hit the supply zone on NAS today. I don't even... Is Norton in here? Norton might be in here. Just replying back to one of the clients. I'm guessing no one else has questions. I don't want to cut it and then someone have had a question, but I'm guessing no one has questions. I know it's not that late, so the latency between the lives. So I'm guessing no one has questions. Yeah, I'm probably going to look to crack on and do some more of these. I mean, I went through a phase of doing quite a few quite often, but I look to do these often again. I need to get back in the swing of things, really. Pull my finger out. I've just been busy with personal stuff, but I would take it that no one has questions. So thank you guys for watching. If you haven't subscribed, subscribe so you don't miss out on these videos. And if you have any questions that I have missed, just leave them in the comments of the video, and I'll obviously get back to you ASAP. And yeah, if you have any recommendations on videos that I can make for future reference, learn to trade videos, things of that nature, please let me know, as I'm always looking to help educate you guys and show you the ropes of trade. And I think it's very important to share your knowledge and help those in the industry. So yeah, if there's any videos you want me to create, just leave them in the comments or drop me a message on Telegram. I'm quite approachable and quite easy to get hold of. So yeah, as I say, thank you guys for watching, and I suppose I'll see you all in the next one.